Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from October 6th to October 10th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from October 6th to October 10th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Please take note that U.S. government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation, so please monitor the calendar closely for any updates. Let's dive into this week's events. Monday starts with Swiss unemployment data, Eurozone retail sales figures, and Japanese household spending data. Tuesday brings Australian Westpac consumer confidence, German factory orders, and Canadian Ivey PMI. Wednesday features a major central bank decision, the Reserve Bank of New Zealand interest rate decision, where rates are expected to be cut significantly to 2.5% from the current 3%. We'll also see German industrial production data, US FOMC minutes, and UK RICS house price balance. Thursday includes German balance of trade, US initial jobless claims, and Japanese PPI figures. Friday concludes with crucial Canadian employment data, including employment change and unemployment rate, along with U.S. Michigan consumer sentiment. This week's key market-moving event will be the Reserve Bank of New Zealand interest rate decision on Wednesday, with an expected 50 basis point rate cut. Canadian employment data on Friday will also be important for CAD pairs. Now, let's go to the technical analysis. This week, we'll focus on the US dollar against the Canadian dollar and the New Zealand dollar against the US dollar, as both instruments face significant data releases and central bank decisions. Let's start with the US dollar against the Canadian dollar. Looking at the daily chart, the dollar-Canadian dollar pair is currently trading around 1.3948, with the price moving higher above the 20-day moving average. However, the last candle on Friday is showing bearish price action, suggesting potential hesitation at current levels. Looking at important levels, the US dollar against the Canadian dollar has support at 1.3833 and 1.3726, while resistance can be found at 1.4055 and 1.4180. The price movement above the moving average is a positive technical development, but the bearish Friday candle warrants caution. The stochastic oscillator is moving slightly lower from the overbought area, suggesting potential for a pullback or consolidation. Friday's Canadian employment data will be particularly important to watch, as the previous reading showed a loss of 65.5 thousand jobs. Any improvement could support the Canadian dollar and push the pair lower toward support levels. Now, let's turn to the New Zealand dollar against the US dollar. On the daily chart, the New Zealand dollar is currently trading around 0.5831, with the price moving higher toward the 20-day moving average. The pair faces a crucial Reserve Bank of New Zealand interest rate decision on Wednesday, where a significant 50 basis point rate cut is expected. Looking at key levels, the New Zealand dollar against the US dollar has support at 0.5763 and 0.5676, while resistance stands at 0.5898 and 0.5985. The price is attempting to recover and test the 20-day moving average, the white line, which will act as a key resistance level. The stochastic oscillator is moving higher toward the overbought area, suggesting bullish momentum in the short term. Wednesday's Reserve Bank of New Zealand decision will be the most significant event for this pair. The expected 50 basis point rate cut could put downward pressure on the Kiwi dollar. Traders should watch how the price reacts at the 20-day moving average resistance during this event. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's Reserve Bank of New Zealand decision and Friday's Canadian employment data, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.